Every investment includes risk, and some investments have a lower number or a lesser severity of those risks than others. In the Golden Visa Fund marketplace, you will find a wide spectrum of risk profiles, ranging from high risk, returns oriented funds to more conservative funds focused on capital preservation. Let's explore this fundamental trade off. Let's start with high risk, returns oriented funds. In Portugal, these are primarily FCRs, or risk capital funds. They are inherently risky, it's in the name. They function much like venture capital, with the potential for high reward, but also the potential for a total loss of capital. You may encounter a fund that is focused on early stage tech, boutique hospitality, or even speculative sectors like crypto. While the potential gains are appealing, you must ask yourself, is this what you're looking for in a €500,000 Golden Visa qualifying investment? Can you afford a total loss of capital? It's a real risk. Everyone hopes that doesn't happen, of course, but the risk must be acknowledged and carefully considered. Offshore investments are high risk, regardless of the fund's focus. You are sending your assets to another country, a decision that should not be taken lightly. Mitigating the total risk profile is the work of a prudent investor, and choosing an investment that matches your own risk tolerance is key. As an American investor, you must also consider the added layer of U.S. compliance. Investment offerings in the U.S. are carefully regulated by the SEC. While these laws extend to every U.S. investor in any investment offering, whether issued domestically or abroad, there is widespread noncompliance among Golden Visa funds. They may be subject to U.S. law, many simply refuse to comply, and I know because I've tried to get them to. Which brings compliance enforcement risk into the picture for both the fund and for its investors. Enforcement action can destabilize a fund. The fees and penalties that can be assessed for noncompliance are high. No fund has financials that have those kinds of costs built in. If they were able to withstand such a blow, they would have hired competent professional U.S. legal and tax counsel in the first place. Beyond U.S. compliance, other countries may not have the same investor protection laws that the U.S. does. I dive into these risks in detail in my video on U.S. tax implications of Golden Visa investments, and in my Don't Get Burned masterclass. Consider this. If a fund cannot be bothered to comply with U.S. law, despite actively marketing to and enrolling U.S. investors, then you expect the fund to concern themselves with any of your needs. You'd be taking on huge risks in exchange for access to the Golden Visa program, but you have other choices. You can look for compliant funds, and I'll teach you how. Then you can consider donation opportunities in the cultural sector. One of the keys is this: asking the right questions. As you explore your options, there are some critical questions to ask. Would you choose this investment opportunity if there was no Golden Visa? Are you sure about that? Some of the folks behind these funds know that the focus is the path to citizenship. They know that the passport's the goal. And so the marketplace of funds tends to be fairly mediocre. They have a captive audience, some of whom are far too willing to make trade-offs in their quest for EU citizenship. Do you genuinely see a market for this fund's focus? Enough to absorb all of the fees, costs for running the fund, and still expect a return on your capital plus a gain? What signals do you have that support this beyond the marketing pitch by the fund or the marketing pitch by an unregulated offshore migration agent who stands to make a handsome commission if you invest? Does the fund, if it's an illiquid fund, have a solid exit plan in place? A great sign is if they already have a letter of intent from a buyer. We talk more about this in my video, The Golden Visa Exit Strategy. The people raising and leading the funds expert in their field, have they returned capital to investors before? Most Golden Visa funds in Portugal are 2 to 3 years old, which is way too early for the fund to have returned capital. Remember, they typically have a 6 to 8 year time frame, maybe sometimes 10. The previous crop of funds was based in real estate assets, which was removed from eligibility in the Golden Visa program in late 2023. And even those too were too young to have returned capital. So unless you're working with a fund that is being offered by a professional fund manager or asset manager with a focus beyond solely Golden Visa eligible funds, You're likely working with a fund ecosystem that has never returned capital to retail investors before. Investing 500,000 euro, just approximately 600,000 US dollars right now, into a high risk fund run by folks who haven't done this before, those are huge risks. Add in lack of US regulatory compliance, and yikes. Also consider whether the fund's projected returns are reasonable or ambitious. And as an American, how can the tax impact be mitigated so that the gains aren't consumed by US taxes? Something else to think about is your orientation towards capital preservation versus returns. In contrast to high-risk funds, there are more conservative, capital preservation-oriented funds that are often open-end and invest in more liquid assets. They're designed to preserve capital rather than grow it aggressively, and they can provide lower risk access to the Golden Visa program. In these more conservative funds, it's important to ask, are the fees and redemption terms reasonable? Are the underlying assets reliably performing? I've seen some open-end funds adding speculative assets like crypto to their portfolio. Do you want that? Has the fund filed appropriate regulatory filings abroad and in the US? Does this fund too carry the risk of enforcement action that could destabilize the fund? Is the fund designed and managed by seasoned professionals? Ultimately, the goal is to choose an investment that aligns with your risk tolerance and your goals and that doesn't carry unnecessary risks. Don't be swayed by shiny promises. Be a prudent investor. For a full education on all these topics and more, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.